Imagine this: money arriving in your account every single month, without clocking into a job, without chasing clients, without relying on one paycheck. That's the power of building a dividend portfolio. But here's the thing. Most people approach dividend investing the wrong way. They look for the highest yields, they jump in and out of stocks, they panic when the market drops. The result? Missed opportunities, wasted time, and no real passive income. Dividend investing isn't about gambling. It's about building a system. A system where your money works for you 24/7, generating income while you sleep. And today, I'm going to show you exactly how to build a portfolio that can realistically produce $10,000 a month in dividends. And before we dive in, know this: everything I share here is the foundation. But if you want a complete, step-by-step plan with real examples, exact stock and ETF strategies, and a beginner-friendly roadmap you can start today, I've put together a dividend portfolio guide, the same blueprint thousands of investors use to design real monthly income. The link is in the description. Watch this video, learn the principles, then grab the guide to put it into action. Now, let's start with why dividend investing works so well. When you buy a dividend-paying stock, you become a part owner of that company. And as an owner, you get a share of the profits, called dividends. Unlike growth stocks that might rise in value but pay you nothing until you sell, dividend stocks put cash in your pocket regularly. Here's the beauty: you can use those dividends for income today, or reinvest them to buy more shares, which then pay you even more dividends in the future. That's the magic of compounding. But how much money do you actually need to earn $10,000 a month? Let's break it down. At a 4% dividend yield, you'd need a $3 million portfolio to hit that goal. At 6%, you'd need around $2 million. Now, that might sound huge. But remember this: every big portfolio starts small. You don't need millions right now. You just need a plan and consistency. Start with what you have, reinvest the dividends, keep adding every month, and over the years, your income will snowball. And that's exactly what the step-by-step dividend portfolio guide shows you: how to go from your very first investment to a growing, income-producing machine, using a system that works even if you start with small amounts. Again, the link is in the description. So how do you choose the right stocks? First, look for companies with a strong history of paying and increasing dividends. These are called dividend aristocrats. Think Coca-Cola, Johnson & Johnson, Procter & Gamble. They've paid and raised dividends for decades, through recessions, crashes, and everything in between. Next, check the dividend yield. A safe range is usually between 3 and 6%. Anything too high often means trouble. The company might be paying out more than it can afford, and that dividend could be cut. Also, diversify. Don't put all your money in one stock or even one sector. Mix consumer staples, healthcare, utilities, maybe some real estate investment trusts. And if you want simplicity, consider dividend-focused ETFs like SCHD or VINE. These give you instant diversification and steady income without picking individual stocks yourself. Now let's talk about reinvestment. This is where the magic happens. Instead of taking your dividends as cash, use a dividend reinvestment plan, or DRIP. This automatically buys you more shares every time dividends are paid. More shares mean bigger future dividends. Over time, this snowball effect is what grows small portfolios into massive income machines. And here's another tip: be tax smart. Use tax-advantaged accounts when possible, like IRAs or similar in your country. The less you pay in taxes, the faster your portfolio grows. But here's what you absolutely must avoid: chasing sky-high yields above 8 or 10%. That's how beginners get burned. They see big numbers, ignore the risk, and then watch dividends disappear when companies cut payouts. Another mistake? Selling during market drops. Dividend investors don't panic. If the companies are solid, the dividends keep coming even in a bear market. Sometimes they even buy more shares when prices are low, locking in higher yields for the future. Now, let me paint you a picture. Imagine you start investing $500 a month into dividend stocks or ETFs. At first, the dividends are small. A few dollars here, a few dollars there. But you reinvest everything. After a few years, those dividends start buying you entire new shares. Then those new shares start paying dividends too. The snowball keeps growing. 20 years later, you look at your portfolio. It's no longer small. The monthly dividends? They're enough to cover bills. Then vacations. Then maybe your entire lifestyle. That's how people reach $10,000 a month in passive income. Not overnight. Not by gambling. But by following a system, consistent investing, reinvesting dividends, staying the course, and letting time and compounding work their magic. And if you want that system laid out for you with simple steps, clear numbers, and beginner-friendly tools, that's exactly what you'll find in the Dividend Portfolio Guide linked below. It's like having a financial coach in your pocket, showing you exactly what to do next. Remember, dividend investing is slow, steady, even boring. And that's the point. Wealth is built quietly, month after month, while everyone else is chasing quick wins and losing money. So here's what you need to do. Start today. Even if it's $50 a month. Pick quality dividend stocks or ETFs. Reinvest dividends. Add more money whenever you can. Avoid the big mistakes. And when you're ready to turn everything you've learned into a real, working plan for passive income, grab the guide below. Because knowledge is powerful. But action builds freedom. Financial freedom doesn't happen by accident. It happens by design. And this is how you design it.